Hello, my friends. It's the Crypto Lunatic, the channel for crypto newbies. And today I'm going to ask the question, where is the market going next? Where is it going next? Are we in a death spiral? Or could this be the build up to a tech AI revolution that is going to explode the crypto market? So I'm going to take you onto a journey of some of the facts, some of the things, the news headlines that are going on, and what is influencing crypto at the moment in a very brief update. So with all of that in mind, then join me on a little journey into what's happening in crypto. So let's start here, my friends. We look at the Bitcoin spot ETF net inflow. Now, for those of you that follow me, you'll know that I like to measure this because this is a smart money. These are the big boys. And are they playing ball? Are they playing ball or are they selling off? And what we see here is from here, from the 9th, so going back 12 days now, it has just been positive inflows into crypto. And you can see, look, all of this daily inflow coming in. And I can tell you that that is to the tune of 2.4 billion since the 9th. So would all of these big investment firms be buying into Bitcoin right now if we were going into a death spiral? Well, they could have got it wrong, but how likely is that? And here we see on this heat map, it's the IBIT Trust that is buying it up. That's BlackRock and their grubby hands. Now, are BlackRock going to be chucking money into something that is about to go into a death spiral? Well, I wouldn't have thought so. But of course, they're not the only things that influence the market, but this is a good start. This says that we're retracing, we're building, we're shaking out weak hands, potentially to go to a leg up. That's how that reads to me. And we look at the block here. It's a news site. And here we see that Bloomberg analysts raised the odds of a spot XRP, Dogecoin, and Cardano ETF approvals to 90%. Now, for XRP, Dogecoin, and Cardano, that's potentially very good news. And all of those have had drawbacks lately. So this could be a time to get into to one of them. If you're a fan of those coins, for example, we look down and we see all sorts of things going on, well, commissions. There's been a few hacks we see in that. But generally, we're talking about spot ETS, which is generally a positive thing. And if we're saying 47 key crypto hires, moves and exits, well, if they're hiring, it looks like crypto is getting exciting. But again, that's just a single point of contact. So the next thing we go here is onto hyperliquid whale monitoring. Now, this is coinglass.com. And this tells us who's going long and who's going short in the crypto market. Now, you can see here the recent activity of what's going on. And we see, look, a short just opened for 15.09 million. So somebody's backing short quite savagely. And what we see here is that the short positions are outweighing the long positions at the moment. Now, this is statistically relevant because the market makers always win. And if too many people are going short, you can be sure that we're going to get some upward activity soon. So that to me tells the story that we are far more likely to go up in the near future than to go down much further because the markets won't want to pay out for all of these long leveraged shorts. So finally, I've asked ChatGPT and Perplexity. I asked them the question. Here it is. What are the biggest influence on the crypto market right now? So major influences. So here we see institutional adoption that we've just seen, that BlackRock is heavily backing Bitcoin at the moment. US spot Bitcoin ETFs have attracted tens of billions and continue to funnel capital into BTC. Now, remember, because it's a fixed supply, that if people keep throwing money at it, eventually they're going to run out of Bitcoins to sell. And that's when the price action is going to get very interesting indeed. So stablecoin regulation and adoption, we've heard about the Genius Act, which I talked about earlier, being passed, which helps with regulation. US is crypto friendly. That's all moving forward. We see the macroeconomic and monetary policy drivers. So market sentiment remains sensitive to Federal Reserve signals, especially around interest rates and inflation. So declining inflation expectations could prompt rate cuts, boosting risk assets like crypto. Another positive sign. Now, here we go on to why it's been suppressed, the geopolitical tensions and volatility triggers. So all of the Middle Eastern stuff between Israel and Iran at the moment is causing market uncertainty. And certainly from all the triggers we've seen, this is the reason that the market has pulled back because everything else seems fairly positive. But of course, this is a concern, and that this could escalate at any given time, causing lots of people to worry, and rightly so. So we look at also tokenization and real world asset trends. Now, this is relevant because we're seeing big institutions play the game now. There's growing interest in tokenizing assets like bonds, real estates, carbon credits on Ethereum, Cosmos, etc. Large firms like JP Morgan, BlackRock, and Fidelity are building tokens tied to traditional assets. More adoption. Tech convergence, AI, Web3, and blockchain. Projects like Render, Fetch AI, SingularityNet are at a crossroads of AI and decentralized computing, highlighting crypto's growing utility and regulatory harmony that we talked about from the Genius Act. So, in summary, crypto markets today are shaped by a powerful mix of institutional inflows, regulatory milestones, macro and geopolitical shifts, and emerging tech and tokenized trends. Stable coins and real world asset tokenization add fresh layers of growth and complexity. Meanwhile, policy decisions from central banks to institutional regulators continue to steer the market direction. So, will we explore? Well, we'll go to complexity to perplexity and ask them exactly the same question. Now, we're going to see a lot of overlap here. Key influences, macroeconomic factors, US inflation data, interest rate expectations, tariff and trade policy risks. And of course, this has been ongoing and seems to be a bit of a false flag at this stage. Regulatory clarity and oversight. So that's moving in the right direction. SEC policy criticism. So informal policy guidance from the SEC under scrutiny, creating uncertainty for investors and market participants. Also, institutional adoption that we've looked into. Over 60% of Fortune 500 companies are now adopting blockchain technology, signaling increased corporate interest and investment in crypto-related initiatives. Institutional investment. So notable investments include Japan's MetaPlanet's 5.3 billion Bitcoin purchase, highlighting growing institutional confidence. Now, MetaPlanet's being compared to MicroStrategy, the Japan's equivalent. They're just loading up on Bitcoin. And that's just one firm buying 5.3 billion worth of Bitcoin. So mergers, acquisitions and funding, venture capital investment in crypto startups surged in Q1 2025 with a focus on real-world blockchain applications and fintech integration. Market sentiment and trends. Fear and greed has climbed 70. I believe it's down from there at the moment. This is not an up-to-date reflection. Bitcoin dominance. Bitcoin maintains a commanding 60% market share, backed by strong performance and all-time highs. And Ethereum and altcoins. Ethereum showing strong gains as their ETF picks up as well. So we've had the geopolitical tensions. We know about the Middle East influencing the market, repressing the price at the moment. And we have seen technological and ecosystem developments. DeFi and liquid staking increase activity, and decentralized finance and liquid staking is driving demand for Ethereum and other DeFi tokens. So, and stable coins like USDT and USDC continues to facilitate DeFi activity to provide stability to the volatile market. So here we go, a summary here with the table there. And they are the major influencers or influences on the market. So the general thing is the Middle East is causing market suppression, a little bit of uncertainty, the tariff war still up in arms. All of these things are being used to suppress the market, but everything else looks positive for crypto. The big boys are stacking. There's a lot more adoption going on. There's excitement around crypto. And I think certainly the insiders feel that we're about to head into an exciting, explosive phase of the market. But of course, I could be wrong. Like everybody else, I could be wrong. But it looks positive, and it looks like a very interesting entry point. But you make your own mind up. That's what this video is for, just to give you the facts, not to give you the fiction. And if you like more of that, then please do subscribe to the channel. And if you like another one of my videos, then you will find that just there.